All right, everyone. Very warm welcome. I'm again your host, Suchi Singh, and today we will go some of the week ahead macro event analysis. And before going through week ahead, let's go through some of the events we had last week from July 1st to July 5th. Starting from Monday we haven't had much of the data last week. German preliminary CPI report just came worse than expected. Looking at ISM manufacturing PMIs, ISM manufacturing prices, it just came worse than expected. However, the price action was really kind of weird on that day, and we haven't had much of the trade to took any profit on back of this trade. We also had ECB President Lagarde. Uh, I think the comments from President Lagarde wasn't many convincing. It was just some sort of a neutral bias she gave it to us. Monetary policy meeting minutes we had from Aussie. This wasn't something I was looking for. On Tuesday, July 2nd, we also had a core CPI flash and CPI flash estimates. It's from Euro area side. CPI flash came in at just as expected, 2.9%. Wasn't It's just showing that the inflation in euro area is really getting stickier, and the policy decision the ECB took last month, it's just they might be thinking that they took the wrong decision by cutting their first interest rate up by 25 basis point, because clearly the inflation is not going anywhere. As we are seeing that it's just got stickier, 2.9% to as came as 2.9%. It's just a little bit above from the forecast, but however it's just staying at where it was last month. And if we look at the timely graph, let me just put it on a line. So look at it, it just came down from let's say 5.4 from July 23rd sustainably downward, and it hit 2.7% in April, and after that it just bounced back to 2.8, and it's just staying right over there, 2.8, 2.9%. So this got stickier in my opinion. And moving forward, we also had ECB President Lagarde. She spoke, and Fed Chair Powell. I remember that he was a neutral comments he made on that day. However, market really took it as a as a dovish, as he said the disinflation process has been started, and it just gave the market a reason to buy the equities and start selling off the dollar. Moving forward, we had a job opening. It just came 8.14 million, and we also had a revision from 8 million to 7.92 million. It's not that big of chunk revision we had, but this data is not very much reliable. However, sometimes market really gets surprised with these data, because the statement from FOMC or the comments from Powell, or if we look at the meeting minutes from FOMC, the participants are clearly saying that they are more focused on labor data rather than focusing on inflation. They might be just pointing on the labor, that if they see the labor has started deteriorating, then they may think to decrease their or let's say they can cut two interest rate decisions before this year. So it can go against their dot plot as in their SEC projections. They stated that they only gonna do one rate cut this year, but it can become a quite surprising to the market, that if they come and say, hey, if we see a labor market showing a sign of cooling way more than we thought, then might be they can say that they can reduce their policy rate before the December meeting. Now, with that being said, moving to Wednesday, July 3rd, We also had ADP, NFP employment change. This data is not trustworthy, in my opinion. It just came 150K lower than forecast, and also we had 157K with a little bit of reason. After that, we had unemployment claims. So here's the thing: we usually most of the time we get unemployment claims on Thursday. However, we had a bank holiday on Thursday. That's why they released most of their data on Wednesday rather than releasing on Thursday. So that's why we had unemployment claims coming on Wednesday. Just came in a healthy territory. So it wasn't something convincing that we can trade behind this data. ISM services PMI really surprised the market by coming 48.8. I mean, that is a really big chunk of move in the data to the downside. We have just seen only once that can go to, let me just back to May 2024 when we saw ISM services heading into contractionary territory. After that, it really jumped back to the expansionary and moving toward 53.7. And also, it was a really surprising move because it just came worst. And if we move back to July 2020, it's been 4 years. It's been 4 years that service has not seen that kind of drop in PMI numbers that we have seen in July 2024. And behind that that number, we did saw some sell-offs in dollar, but it wasn't, I think market wasn't focusing on by selling the dollar on that moment. I think market was focusing on geopolitics, on or maybe on risk premium side, like the election. So we had on French in France, and we also had elections in UK on Thursday. We will talk about it later. But after that, we had FOMC meeting minutes. That was released 3 p.m. Atlantic Standard Time, and we also saw in this meeting minutes they were stating that participants are still thinking about rate hike if they see the inflation is not coming down within the reasonable time frame. However, some of the markets think this is really outdated. However, as we are the participants, or as we are the manual retail traders, we need to pay attention what the statement says anyway. So here's we had from French side, we had CPI month on month came in really worse than expected. It was 0.0%, clearly feeding the narrative of SNB to cut rates before their next before the end of this year. And also, if we don't forget, we had a very dovish SNB coming in the market and saying that, hey, we are ready to cut the rate, and they did cut the rate. And also they released their projections, and they really surprised in their projections by decreasing their interest rates. I think from by 20 or 25 basis points. That was something I'm not sure about that, but they really came dovish, and after that we really saw a nice chunky move in USD Swiss franc heading upward, and it just continued after that meeting. And this 0.0% is clearly fitted into the narrative, and it just gave another reason to sell off on the point of Swiss franc. Now we had a parliamentary elections, and let's talk about this now. Okay, so UK general election. Let me bring that up for you and let it just get loaded. Okay, here we go. So, okay, so Labour Party really got the majority by 412 seats. So we had 650 seats in UK Parliament, and the Labour Party really got the majority with 33% of voters favoring in Labour Party. 412 seats got. Conservative Party got 121, and Liberal Democrats, I think it's a Rishi Sunak party, and really they got the headwind and they just end up having 72 seats in the parliament. So with the labor market coming in the UK, it went really positive for the pound and really supported that that the market that the market is really happy that labor market is in the game now. So if let me see if I can find last year. All right, here 2019. So in 2019, see, Conservative Party had 365 seats. That was a majority the Conservative Party had, and after this, we had a really the Conservative Party moved in the opposition party, and the Labour Party is on the steering wheel of the US UK economy. So overall, it seems that the market take it as a hawkish and really favoring in a pound. We will see what things bring up next, and after these this elect election market maybe now can start clearly focusing on monetary policy side, because they are not paying much of the attention on this side. Okay, let me just fix this up. Okay, now talking about Friday, because Thursday we had a US holiday, so the liquidity was really thin. And just a reminder for you all that trading in the bank holiday, especially if it's a holiday in US, then you can clearly see the price action that aren't moving anywhere. They're just sitting there because the US participants are really away from their desks, and the US has a really good grasp on moving the markets. So, with that being said, moving towards the July 5th, Friday, and it was an NFP day. NFP day, so aka labor data we had from US side and also had the Canadian side. Usually I don't pay much attention on the Canadian side, however it came 6.4%, just above from the forecast 6.3%, and it's just showing that Canadian labor market is really cooling off and really facing a strong headwind with the current policy rates the Bank of Canada keeping. However, they has been dovish by I think on the last minute they cut their interest rate by 25 basis points, but with still the the policy rate staying I think close to 5%, still seeing as is a restrictive policy, and still clearly we can see the signs on the labor market just clearly showing negative effects on the economy. Like the employment change came in negative 1.4k, and employment is raising from 6.2 to 6.4%. Now, looking at the USD average hourly earnings, this came as expected. NFP 206k better than forecast, and also we had unemployment rate raising from 4.0% to 4.1%. It overall was a pretty much mixed bag. If we look at the data point of view, and the price was really choppy. Oh, I didn't took any trades. Usually we clearly want to see a one side volatility, one side data. Either it all come in better or all come in a weaker data. However, it's just clearly wasn't something that I can find an edge to trade, and so I just skipped it. So that was the last week what we had, and now looking at the week ahead, let's start from the French Parliament elections. Uh, so how it started, let's talk about it. The French Parliament. So clearly after the Macron uh, party, they really saw that his party is getting defeated in European Parliament elections, and that's why he called re-election. And after calling re-election, the re-election is supposed to held on in two rounds, and the first one on I think was on 30th of June, and the second one was on the 7th of July. And on the first poll, let me just bring that up for you. Okay. All right. So this is a second round. So we will talk about it later. This is the first round. So in the first round, the results pointed to a national rally RN party making the majority 33.3%, and the NFP was the biggest second biggest party coming out with 28.6%, and the Macron ENS party having a 20.9%. Clearly, the approval rate for Macron here is that is just disapproved by 69% and approved by 31%. However, the party was really surprised, and after these first round of polls, in response to this, Macron's party and ENFP, they both came to an agreement that they want to stand down their candidates in 3 or 4 runoffs in order to avoid a vote split and ensure that they don't want the RN party to get in the majority. So with that, on Tuesday evening, they 216 candidates from both parties, ENS and NFP, had stood down, and which developed. Uh, uh, I think. According to Harris poll, it really gave a hard time to RN seats. Which the projections came from 190 to 220 seats, which was having before the first round. They had 230 and 310. So as such, even with the theoretical but in practice unlikely support of all RN opposition, LR candidates, and RN-led majority is no longer within the forecast range of polls. So with this moving to the second round, now we on the second round with that stand both ENS and NFP took clearly the RNs went to the third spot, and with the majority not majority but highest number coming on a new popular front 32.6%, which is 108 seats, and ENS came second with 161 seats, 27.9% majority. So, as such, the outcome points to another hung parliament. Hung means they both may collide together, a coalition parliament in which the party NFP said they will show the face of new president within the week, and that was really a positive for the euro, and euro really got pushed higher after this news. So as a reminder, okay, scenario analyst pre-election had the risk to OAT bonus 10-year yield spread as roughly equivalent under an NFP and RN absolute majority. So there is also been talk that rather than these two parties can come together, there may be a chance that NFP and RN can collide together and can create a majority and can run a new parliament. However, this is just a scenario. How it's not happening right now. Okay, so overall, the ENS and NFP agreement has moved the main market risk on of an RN majority, but the underlying challenging fiscal backdrop will remain. All right. So with that being said, we will get some good news. Maybe we don't know any sort of election news within this week. Who's gonna be the next president of France? So with that being said, these were the things we had from France parliament elections. Now, let me just fix this. Okay, Monday today is Monday, so today we haven't had much of data. However, we do had a MPC member Haskell speak, and he just gave some ordinary comments. He wants something that can create some volatility in the markets. Now, what about tomorrow? Tomorrow is the major event, as we're gonna see Fed Chair Powell gonna testify, and he's gonna on Tuesday he gonna get testified in Senate Banking Committee, and on Wednesday he also gonna testified against House Financial Service Committee as Monday, as I said before. So clearly, what we are looking some surprising comments from Jerome Powell, because as market expecting, he might reiterate his recent remarks that where he said that the disinflation trend is showing signs of resuming, and that they are getting back on the disinflationary path. So these are the things that he might recreate, and also he might say that officials want more confidence before being comfortable with reducing policy rates. So also the key things he can talk about is the labor market. If he studies if the labor market unexpectedly weakens, the Fed would react. And also just a quick reminder, in the minutes on the FOMC June minutes we had last week, the participants saw modest further progress toward the committee 2% inflation objective in recent months, and with CPI data seen by participants as providing additional evidence of progress toward the inflation goal. So participants also affirming that additional favorable data were required to give them greater confidence that inflation was moving sustainably towards target level. And participants said policy should stand ready to respond to unexpected economic weakness. And these were the things we had from FOMC meeting minutes. So clearly, what we are looking for Fed Chair Powell, as I said before, there's some hawkish or dovish comments that we are want to see from from Powell, and the usual stuff as we are hearing every time he speaks is he's moving cautiously. Fed has enough time to respond. These are the things we are not looking for to trade. So clearly something surprising. If he says, then we can look to trade maybe to the upside or downside. That depends on what he says on Wednesday and also on Tuesday. So except for that, we also had China CPI and PPI coming out. So this is something to keep an eye on. So now talking about New Zealand cash policy rate. So just a quick reminder, on the last meeting, the RBNZ came really hawkish, where they really kept their official cash rate, surprisingly maintained their central bank cash rate at the current level, with money markets currently pricing around 95% chance of the OCR to cap at 5.5% and just 5% probability for a 25 basis of cut. So also on the last meeting, the central bank raised its OCR forecast across the projection horizon, with the rate track suggesting a pushback in the timing of the first cut to the late 2025. So they were really hawkish, and also uh, in the presser, the language from RBNZ Governor Orr during the presser conference was also hawkish, as he stated that it will take time for domestic inflation to decline, and they have limited upside room for inflation surprises. So the bank was really hawkish, and they shown like no mercy regarding the rate cuts. They were like, we're gonna keep our rates as they are for this year, and might be there are no cuts for the next year too. So well, that solely depends on the data. However, currently official cash rate market is clearly expecting no rate cuts from the from RBNZ side, and however we will do look that what they have to say in their rate statement. That quite something we will be looking forward. Now, we already had talked about Fed Chair Powell testifies. As I said, he is going to testify against House Financial Service Committee, and we will look what he has to say on that day. It usually goes for an hour, hour and a half interview or testimony he has to give in front of the other committees. Now, rather than that, we don't have anything major on Wednesday. If we're talking about Thursday, we are having a GDP month over month from Great Britain side, and this is something really focusing for the market from the US dollar. We are having inflation reports coming from US. Just hold your guns, I guess, for that day, and because it can create some volatility if we clearly see some sort of upside or downside uh, data coming from the US side. So this is something I'm clearly looking forward to trade. Now, after that, on the last day of this week, Friday, July 12th, we are having a core PPI and PPI month of month. So just a quick reminder that CPI and PPI, these have really high correlation because producer price index and consumer prices index, clearly if PPI rises, the producer is definitely gonna put the cost of producing or manufacturing an item to the consumer. So clearly if PPI rises, then CPI, there are high chances that CPI will rise. So we can have some kind of sort of a sense that where the PPI gonna land if we see CPI heading steeper, going up or down. So then clearly we can have some sort of a sign that what data will come from PPI month on month or PPI core PPI a month on month side. So also we are having a prelim University of Michigan consumer sentiment, and it is already got revised from 65.6 to better 68.62. However, we will look if we can get something nice juicy from this data. That's it from the macro event analysis side. We are not having any some sort of dull week, I guess that's if I can say. So I hope this week we will, or I hope we get some juicy moves and we can make some buck out of these financial markets. So here we can come, we reach at the end of this video. If you guys have any questions, if you want to know about something more about these financial markets, don't hesitate to let me know. Just comment down in the comment section, and I will try to get back to your questions as soon as possible. Thank you very much, and I will see you next week. Bye bye now.